Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the second quarter balance of payments outcomes, check recent exchange rate movements, take a closer look at that British bank crisis, and we'll wrap up with what the other media are reporting. International funding support for heavily indebted countries like New Zealand has got a whole lot harder to secure since the credit crunch hit the financial markets. So it is important that we reduce our current account deficit from the very high levels it's grown to over the past 4 or 5 years. Today's announcement on the balance of payments outcomes for the second quarter came in a little better than many experts had forecast, and this is fortunate in the current financial environment. Future outcomes should improve this performance as well, with slower domestic growth and enhanced export returns from higher commodity prices, enabling us to move this huge structural current account deficit back to more manageable levels. If the progress reported today continues, we'll be in a better place to weather the credit crunch consequences than if we were becoming an even bigger international debtor. GDP data is out next week, and we would expect this current account deficit result today to show that its proportion of GDP is narrowing also, perhaps down to 8.5% or even lower. A current account deficit of 8.5% of GDP is what the Reserve Bank has assumed today's numbers would show. The New Zealand dollar has staged its biggest one-day rise in 9 years after a sharper than expected interest rate cut in the United States. Westpac market strategist Michael Gordon said the Federal Reserve's decision to cut its key interest rate by half a percentage point to 4.75% had restored the appetite for risk. It's been read as a sign that the Fed is actively trying to get on top of the recent concerns about the subprime mortgage market and tight credit conditions, he said. Equities around the world have had a pretty good day. High-yielding currencies have done well, and the New Zealand dollar has been the main beneficiary of that. While the Kiwi has risen to about 73 US cents against other currency, the rise has been less pronounced, although the changes are all rises. We're up a bit more than 1 cent against the Aussie, 2 cents against the euro, and up nearly 4 yen. The rate against the yen is worth watching, as their central bank held official rates unchanged yet again. The conditions for the carry trades are being reignited when expectations grow that others may hold their rates or drop them. Dr. Neville Bennett has written more on the British crisis enveloping their bank Northern Rock. This is an enormous institution with assets of more than 325 billion New Zealand dollars. That's about twice New Zealand's GDP at current prices. An old-fashioned run on that bank has become the symbol of the sharp end of the international credit crunch. Surprising many, subprime loans originated in Europe as well as the USA, and this is reinforcing the difficulty of trading in credit securities. The consequences can be devastating for depositors and banks who hold this dodgy paper. And what Northern Rock shows is that even central bank intervention and public guarantees don't necessarily quell depositor angst. Northern Rock is a mortgage lender. As such, it tended to borrow relatively short to lend long. It's a classic mismatch that can go horribly wrong. And New Zealand has institutions like that, even big ones. But our regulatory approach seems to be that depositors should research their institutions before investing monies, an approach that seems naive in today's world for most depositors. At a minimum, we must develop a comprehensive deposit insurance program in New Zealand. You can find Dr. Bennett's latest review from the links on this website. And finally today, a quick wrap-up of some other recent news. The pump price for unleaded 91 petrol is now over $1.62 per litre, according to the latest government data out for last week. Crude oil prices are to blame, with that component over $70 US a barrel, and at current exchange rates, that is now pushed well past 100 New Zealand dollars a barrel, still $10 off the all-time record. Of course, rising prices also increase the tax take. Palmerston North Finance Company Spears issued a statement yesterday assuring there had been no material change in the circumstances since its last report to the stock exchange earlier this month. This follows media speculation about this finance company in the past few days. You can get more news and start with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.